This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on December 14th, 2012. Our time is 8:06 Mountain. Radio show runs 6:30 CHED. Also, we're on QR77 in Calgary. If you ever miss a radio show, obviously we're on the radio. We're online on Harold's websites, HESradio.com, rarecoloreddiamonds.com, and we're really on demand, too, at your convenience, anytime you want, through iTunes. We have our podcast through iTunes. You can listen on your iPad, your iPod, your iPhone. We're there for you anytime you want. Our radio show is portable. To invest in precious metals, there's only one company Harold recommends you use. That is Worldwide Precious Metals. You can connect with them at 1-866-623-2002. Their website is wwpmc.com. We'll talk about diamonds a little later in the show. Harold's website is rarecoloreddiamonds.com. His auction site is hsfineauctions.com. And it was an interesting week. As predicted, we talked about this a few weeks ago, Harold. The Fed boosts QE with $45 billion in monthly Treasury purchases. And what does that mean? They are purchasing roughly $85 billion a month. Between the mortgages and the treasuries, that is $1 trillion. They are obviously stimulating the economy, or trying to. They're printing $1 trillion, and they are going to do it to infinity, or until the unemployment rate gets down to 6.5%. And even then, Ben Bernanke, when he was interviewed after they gave their Fed rate, which was basically the same, 0 to 2.5, he said that even then, that was sort of an artificial target. So, Harold, QE to infinity, which is a very positive thing for hard assets.
You would think so, but you wouldn't think so looking at the markets this week, because the markets are so confused about this. Quantitative easing should have sent the markets rocketing, stock markets and precious metals markets, because printing of $1 trillion means an extremely weak dollar, extremely high inflation, and $1 trillion going back into the economy, which is good for stocks, extremely bullish for metals. And that didn't happen this week, and the reason for that is that it's offset by this fiscal cliff situation. We're getting closer to the end of the year. They're not even close to an agreement at this point, and the confusion over to that situation is just, sending the markets into a frenzy. They just don't know what to do. But again, you've got light volume at this point here. You're a week away from Christmas, basically. The trading really starts to back off a bit. So all in all, the market is just digesting what's happening with this fiscal cliff. On one hand, it seems almost impossible to believe that the U.S. government will not come up with some solution for this fiscal cliff. But on the other hand, they haven't had a budget since for 5 years now. So basically, you would think that this is the most important thing, because, again, it could send the markets into a total tailspin. If they don't come up with a solution to this fiscal cliff before the end of the year, the stock market could drop by 20 or 30% almost immediately. So, again, that's how important this situation is, but there's no advancement whatsoever, and that's why you're seeing this type of volatility in the market, because nobody really knows what to do. All in all, even though the market fell off this week, we've seen it down one day, up the next day, down one day, up the next day type of thing. It just doesn't seem to have any direction at this point. But one thing, it is trading within its range. The fact is that gold is trading right now right at around the $1,700 level. There's heavy support in the market at $1,680, which we actually hit last week, $1,682. Then the market came all the way back up to $1,720. As we're taping the show on Friday, the gold market's trading at right just slightly below $1,700. But again, this market could just take off and run, and it should have done that based on Bernanke's announcement that they're going to print $1 trillion worth of U.S. dollars, and that's going to push the U.S. dollar down. So in actual fact, we did see the euro come back up this week. In fact, the euro is trading back above the 130 level, which is a support level for the euro. But all in all, the metals were just lethargic and just didn't do what they were supposed to do, and that's primarily due to the confusion over this fiscal cliff situation. all in all, we've got the gold market trading right around the 1700 level. Silver's trading above 32. There's heavy support in silver at $32.30 and then $28.50. The ultimate is $26, which is what we hit last year, but all in all, I don't think that we're going to hit that market. Again, we've got the platinum market trading up today just a couple dollars on the day. We're trading at $1,623, and the palladium market is back over 700, trading at 705. The palladium market is actually held in there very strong. Stock markets have been also lethargic, up one day and down the next. The Dow's trading right now just slightly above the 13,000 level. You got the TSX up 11 points today, trading at 12,300. The U.S. dollar is back below the 80-cent level, trading at 79.87. Again, the U.S. dollar should continue to fall substantially with the news that they're going to print about $1 trillion, and the crude oil market is up 40 cents today, trading above the 86 level at 86.29. The Canadian dollar is doing very well. The Canadian dollar is trading at 102 approximately, or 101.5. So you do have the U.S. dollar lower than the Canadian dollar at this particular point. So again, getting close to the end of the year. A lot of traders go away for the holiday. It's been a tough year for a lot of traders, and basically the closer we get to the Christmas holidays, you're going to see the market basically go very, very quiet, as a lot of the traders will be gone. But we will not be gone. We will be here, and we do watch the markets every minute that they're open. We will be doing our radio shows throughout the entire holiday season. So, again, we will not leave you with no information. We will be here for you. And even though we do want to take a couple days off ourselves, we can still receive all of our emails and phone calls. So if you need us at all, we are certainly here. But all in all, we are very bullish on the market. We don't see any possible way that with the printing of $1 trillion that the gold and silver market are not going to rally going into next year. Again, with the confusion over the fiscal cliff, I can understand the uncertainty in the markets at this point, but once they have that situation out of the way, printing of $1 trillion weakens the U.S. dollar tremendously and should send gold and silver prices skyrocketing, as it's one of the most inflationary situations that we could possibly see. So that's the way we see the market so far this week. Again, all in all, the market's trading within its range, so there's no problems at this particular point. But we do want to see what the final result will be for the fiscal cliff before the end of the year. If that doesn't get resolved, look for stocks to fall off substantially starting into the new year. And again, I don't see any way for this market in gold and silver to go but up over the longer term. That's why we don't trade this market. We buy and hold. You buy the physical metal. You don't heavily leverage anything at this particular point because, again, the markets are so volatile and so dangerous, because you've got situations out there at this time that could wreak havoc on your investments. And again, you don't want to take any unnecessary risks at this particular time, because if the fiscal cliff does not work out, stocks could fall by 20 or 30%. On the other hand, you could see gold and silver prices skyrocket. If they do come to a conclusion on the fiscal cliff or even a short-term solution, you will see stock markets settle to go higher, and I do believe that gold and silver will move on their merry way, because there is no chance with printing of $1 trillion that we're not going to have inflation going forward. So we want to stick with the same game plan at this point, to remain very conservative, to not take unnecessary risks, to not speculate in the futures markets on the gold and silver markets or anything at this point, because again, between the fiscal cliff and between these derivative markets, which in my opinion is the most frightening situation out there and possibly the most detrimental situation to the overall markets, is the derivatives market. And there is no doubt in my mind that within the foreseeable near future, we will see some issues with the derivatives market. The reason that I'm so concerned about that is that it's the biggest market in the world and it's unregulated. It's in the quadrillions of dollars, and that was a market that was responsible for plummeting the stock markets and the mortgage markets and the interest rates markets and all that during 2008. And we could have had massive repercussions as a result of Lehman going under and the unwinding of these derivative positions. So again, there are landmines out there that are so severe that could wreak havoc on the markets, and we just don't want to be in a situation where we wake up one morning and find out that stocks are down 20, 30, 40%. We just don't want to be in that situation. There's no reason to speculate in those markets at this particular point. The smart move is to buy and hold. The smart move is to buy physical gold, physical silver, physical diamonds, hard assets, put them away, and just sit back, and whatever the markets are going to do, you're not going to get in trouble because you don't have leverage, hurting your position. So, again, at this particular point, we have to see what's going to happen with the physical cliff. Again, we have our eyes on the derivative market, but all in all, with the news that came out this week, I believe that when Bernanke outlined his plan to print money to oblivion, I just don't see any way in the world that we're not going to hit our numbers in gold and silver. Was I disappointed with this year? You better believe it. I honestly thought that we would see gold prices above $2,000 this year, and I thought that silver prices would be above the $50 level. We'll do, at the beginning of the year, our show where we do make predictions, but again, this year we did not hit our numbers. Even though the gold and silver markets were higher on the year, we did not see the moves that we thought we were going to see, and that was primarily because of the uncertainties in the market. But all in all, over the long term, the next 3, 4, 5 years, we do anticipate that the price of gold will be well above $3,000, $4,000, $5,000. I don't see any way that it won't be, and the silver market will be in the $100 to $200 level. And again, based on supply and demand and the overall marketplace, which should turn out to be extremely inflationary with high food prices, extremely high oil costs, and again, weak dollars, I just don't see any way that we're not going to hit our numbers in gold and silver.
As Harold mentioned, today we're taping the show on the 14th of December. We will tape again on the 21st and 28th for the weekends of the 22nd, 23rd, and 29th, and the 30th. You will hear us on the radio on 630 CHED and QR77 in Calgary. Obviously, as I mentioned, if you miss a show during the holidays, you can catch us online. HESradio.com is Harold's website, HESradio.com. The shows are archived there. Also, rarecoloreddiamonds.com. And I should mention we have our podcast through iTunes. If you're looking at hard assets, now is the time to speak with Worldwide Precious Metals. They're the experts in this very specialized market. They've been in business over 10 years, the entire time of this bull run in precious metals. The only company Harold recommends you use, 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com. We have a fantastic newsletter. You can get our newsletter free of charge. We send it out via email every week, and it is a must-read. It's the companion to our radio show. You can go through it in a matter of minutes or spend hours. Get it from Worldwide or from Harold. Some of the quotes this week in our quotes and quick hit section, along with our charts. Stephen Lieb, money manager, very, very bullish on precious metals, gold, but in particular silver. He believes silver could go $100 to $150. He said this week Wednesday was Fed Day, and the Fed didn't surprise too many people when they announced they were going to buy $85 billion worth of government paper each month. If you do the calculation, that comes to $1 trillion per year. This leaves me speechless. $1 trillion worth of paper each year. That's why we're saying you need hard assets that cannot be debased. You can't print diamonds, you can't print gold and silver. You can print money, and that is exactly what they're doing in the United States. Quantitative easing to infinity, and it's now being based on some artificial numbers, and they're talking about the unemployment number being one of them. Right now, the unemployment in the United States around, according to their figures, 7.7. If it can get down to around 6.5, then they may take their foot off the pedal just a bit. Robert Fitzwilson says, if one has to preserve wealth, the time for action is now. There are no pitchforks or torches visible yet, but there will come a time when the free mob will demand that governments consume all wealth. Real assets, particularly gold and silver and even agricultural real estate, have historically been considered safe ground. Switch out of fiat money and fixed income before it's too late. It's your best chance to stay wealthy and emerge from this old financial system not only intact, but perhaps wealthier than you ever imagined. Robert Fitzwilson, in the investment business for 40 years. He was interviewed by King World News. Eric King has a fantastic website, check it out. And I do agree that we are in a position that eventually there could be a new order of how the world works on a monetary basis, Harold. And when you think about it, gold could definitely play a role. One other quote here from Michael Pinto. He says the Fed's new policy is incredibly dangerous and virtually guarantees the U.S. economy will suffer a severe depression in the future. For the reasons, and he mentions this, and you can read it in the newsletter stated above, it's prudent to use the austerity threats emanating from the debt ceiling and the fiscal cliff as an opportunity to accumulate precious metals. And once those issues are resolved, gold should be the primary beneficiary. And that's what we believe. As you said off the top of the show, Harold, people have pulled their horns in. The uncertainty of the fiscal cliff, what's happening in the United States. You have the President of the United States, Obama, saying one thing, John Boehner saying another. It doesn't look like they're going to be able to get a deal. If you thought the hockey lockout was maddening, these guys are even worse. And eventually, we don't know the exact date or time, but we were right in the past. We believe we'll be right in the future. Our thesis is gold and silver will move in a very, very big way, Harold.
You bet. I don't see any way that it won't. Again, but at this particular point, it's posturing in the market. It's the end of the year. You know, the settling of books and things like that. But there's no doubt in my mind where these markets are going. And again, I own physical gold and silver, and I own diamonds, and I'm not selling anything. I haven't sold any gold and silver in the last 12 years that we've been in this market. I'm a firm believer in it, but I've been in these markets before. I've traded these markets back in 1979 and 80 when gold went all the way from $32 to $125 all the way to $8.50. I traded silver from $1.25 all the way up to the $50 level, and I've traded diamonds in 79 and 80 when they responded to inflation and went up 500% in 2 years. So again, I've got experience trading these markets. I eat, sleep, and drink them, and basically we have been doing this radio show for going on 13 years now. We've done over 530 shows, and we have never, ever missed a show. You know, while everybody is on vacation coming up, we still do our radio shows because there are people that depend on the information that we give to be able to make an intelligent business decision. So all in all, again, we understand what this market is doing at this particular point, and there's no problems with it. The fact is that as we go into next year, we'll have a better indication as to what's going to happen with the fiscal cliff. Again, we'll keep our eyes definitely on that derivatives market, which is a frightening market that could really wreak havoc on the markets. But all in all, with the news that came out this week with the Federal Reserve saying that they're going to print $1 trillion, and if they do that for the next 4 years, there's a $20 trillion that Mitt Romney was talking about. $20 trillion in debt. There's just no way in the world that is beneficial to the U.S. economy. And again, as bad as things are going here in the United States, it's bad, if not worse, in Europe. So you're talking that half the world at this point is in big financial trouble.
Connect with Worldwide Precious Metals. Start your own precious metals investment account today. 1-866-623-2002, their website, wwpmc.com. They can help you manage your precious metals investment account, and they're there to help you maximize profit, minimize the risk, stay away from people that are not experts in this field. Worldwide, they are the experts. They have over 10 years of knowledge in this area. The entire time we've been doing the radio show. Connect with them, wwpmc.com, 1-866-623-2002, and get our free weekly newsletter sent out to you by email, free of charge, every week. Some of the stories in our newsletter. Bank of America, they believe that very, very bullish on gold over the next few years. They expect gold to go to $2,400 an ounce by the end of 2014. They think that short term we could see $2,000. They believe the floor on gold over the next decade will be $1,500, and they believe that the next phase of QE is going to be very positive for gold and silver. Also, Morgan Stanley. Here are 4 reasons why gold is their favorite commodity for 2013. A weaker U.S. dollar, central bank buying, ETF demand, a recovery in Indian demand. And if you think people are bullish on gold, take a look at silver. John Embry, an article from King World News. We have it in our newsletter. You can click the link and read the entire story. This is why silver will smash through $100. When it comes to silver, I'm extraordinarily bullish, according to John Embry, on silver in terms of both supply and the demand side. As the metals really begin to run, the average person will focus their investing on silver. So the masses will come into the silver market. The other thing which is fascinating about silver is that unlike gold, which isn't useful for much other than hoarding and jewelry, silver has a number of uses. And he goes into some of those uses, but he says the fact that 75% of silver supply comes as a byproduct of base metal production, if the global economic prospects are as bleak as he believes they're going to be moving forward, the demand for base metals will drop and a number of mines with base metals will close. So he sees actual mine supply for silver falling in the next 5 years. He says, I don't see any negatives in the silver story whatsoever, and I think the price is going to at least triple figures in the next couple of years. We will also see gold versus the silver ratio heading towards the historical ratio of 10 to 1 to 15 to 1. That is going to shock a lot of non-believers. And Harold, we have about 2 minutes left in this segment. But, this is like the U.S. election. There are people who believe that U.S. President Obama is going to be reelected, those that really strongly believe that Mitt Romney was going to be elected. There are two theses in the world of finance. Some people believe that hard assets, not the place to be. We believe hard assets, yes, that is the place to be based on what's happening with monetary policy. And obviously what's happening over with sovereign debt in Europe as well, and even geopolitical, which we have not even touched on with about a minute here left, minute and a half. Geopolitical is a factor. We haven't even talked about Iran and Israel.
You bet. There's so many factors out there, Randy, that again could affect the markets in a huge way. But, everybody has their own opinion, and that's what makes the market work. When you buy a stock, you're buying it from somebody who's selling it. So, again, some people are bullish, some people are bearish. That's what makes the markets run. Basically, we're very bullish on gold and silver and hard assets, and for all very good reasons. So, again, that's what makes the markets move, and there's no problems with it either way. We just are sticking with our prognostication, which is substantially higher prices in hard assets going forward over the next 4 to 5 years.
Yes, we have been proven correct in the past. Harold made the prediction when we started doing the show back in 2001. Gold was around $250, silver around $4, and the market has come a long way. Gold up to $1,900, silver to $50. We feel the best is yet to come based on monetary policy around the world. They have, even if they fix this fiscal cliff in the United States, they still will have trillion-dollar deficits as long as you can look into the future. And obviously with low interest rates, that's a positive for governments because they don't have to pay out a lot of interest. Now's the time to have your own precious metals investment account. They can print money, but they can't print gold and silver and diamonds. Connect with Worldwide Precious Metals, 1-866-623-2002. Their website is wwpmc.com, wwpmc.com. Telephone number 1-866-623-2002. It was a very exciting week in the world of diamonds. We'll talk about it as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping this show on December the 14th, 2012. And I should remind everyone, we will be taping on the 21st and 28th, and shows will be running on those weekends as well, the 22nd, 23rd, and 29th and 30th. At the end of the year, Harold will have his prediction show, which is always very, very exciting. Our show runs 6:30 CHED Edmonton, QR77 in Calgary. If you ever miss a radio show, they are archived on Harold's websites, HESradio.com, RareColoredDiamonds.com. We have a podcast through iTunes. You can listen to the show on your iPhone, your iPad, your portable device. You can listen to it on your computer. Anywhere you go, you can listen to our radio show. We are there for you 24/7. 1-866-623-2002, the number to connect with the company Harold recommends you use when it comes to investing in precious metals, gold, silver, platinum, palladium. Their website, wwpmc.com. Telephone number to connect with them, 1-866-623-2002. Harold's websites for diamonds, rarecoloreddiamonds.com. And you can speak with Harold, 1-800-432-1022, 1-800-432-1022. His auction site is hsfineauctions.com, hsfineauctions.com, and he'll talk about that shortly. Our featured diamond this week from rarecoloreddiamonds.com. This is a stunning diamond. A 2.71 radiant cut, fancy yellow, internally flawless diamond. It is absolutely stunning. You can see video of this diamond at rarecoloreddiamonds.com under the featured diamond segment. It's also in our newsletter. We have a picture and a link to the web. It is absolutely stunning. Now, this week, it was a very, very busy week. We had two auctions. Sotheby's Magnificent Jewel Sale in New York City on December the 5th. And we'll mention some of the auction results here a little later, but the auction results were very, very strong. We also had another auction, and this was Christie's Magnificent Jewel Sale, New York City, December the 10th. And we have auction results there as well. But, Harold, there is one story, and I think this is a must-read story for those that are invested in diamonds or want to invest in diamonds. The Wall Street Journal had a story called "A Diamond is Forever, Depending on ROI, Return on Investment." And they go into, in this article, talking about how women in China and India, they love their diamonds, but they also love making money on their diamonds because it is an investment. This is a must-read article, and Harold, I know you will send it out to anyone who wants to read it, but this is one of the best articles I think we've had in all of 2012, and we've had some good ones, but it shows the potential of the diamond market in India and China and how you have all these different women. Sure, they love their diamond ring on their finger, but they see it as an investment, which is very exciting.
Well, it certainly is an investment, and a great one, especially with the markets the way they are right now. So, one thing you need to know is that not all diamonds are investment quality diamonds. In fact, very few of them are investment quality diamonds. Diamonds come up through the ground through a volcanic eruption, but most of them do not turn out to be investment-grade diamonds. In fact, some diamonds are unbelievably rare, like red diamonds. There's very, very few red diamonds that have ever been found in the world. They come from Australia and South Africa, and if you did get a red diamond over a carat, they could be over $2 million a carat for a diamond the size of your baby fingernail. Then you've got blue diamonds. Blue diamonds over the last 7 years have skyrocketed in price because there's so few of them available, and basically a vivid blue diamond in 2005 could have been purchased for about $200,000. Today they're close to $2 million. They've gone up 1,000% since 2005. Now, green diamonds. Green diamonds are also unbelievably rare. In fact, green diamonds, most cutters have never seen a green diamond. In fact, green diamonds come out of the ground as black. They've got a black skin over them that has to be peeled off. And basically, for many, many years, the cutters of these diamonds thought that they were black diamonds and would sell them for $400 to $500 a carat. A green diamond is $300,000, $400,000, $500,000 a carat and up. So when you grade a green diamond, because they're so difficult to grade, as a cutter, you must take that diamond to the GIA in New York, the Gemological Institute of America, and what they do is they want to see that green diamond as it's rough and then going through its cutting process so they can determine the color. So again, you've got those three types of diamonds, reds, blues, and greens, that are very, very expensive and not in the price range of most investors. But you do not have to spend millions of dollars or even hundreds of thousands of dollars to make an awful lot of money in the diamond market. In fact, the diamonds that we bring to our clients are very reasonable and have tremendous track records that do way better than any investments that are out there today, and these are very safe investments. So there's three types of diamonds that we recommend to our clients at this particular point. They all have track records, and they are not in the multi-million-dollar range. In fact, yellow flawless diamonds. We offer yellow flawless diamonds from South Africa. These are magnificent diamonds, and from South America. They have to be internally flawless, and they have to be either the canary diamonds, the fancy light yellows, they're known as canaries, fancy yellow, fancy intense yellow, and fancy vivid yellow. Those are the 4 best colors that you want to invest in. You can get involved with canary diamonds, fancy light yellow flawlesses, starting at about $15,000 a carat. These diamonds go up by 25% a year, pretty well every single year. They double every 4 years. But the exciting thing about them is that during times of high inflation, 1979 and 80, these diamonds went up 500% in 2 years, meaning a $20,000 diamond today could be a $100,000 diamond 5 years from now. Most of our clients that buy yellow flawless diamonds have put them away for retirement. You can rely on these diamonds. They're safe. They never, ever fall in price because there's so few of them available. Maybe 100 to 125 yellow flawless diamonds of extremely high quality are available for the entire world in a year. And most of those diamonds end up in the hands of our Canadian clients sitting in their safety deposit boxes. And these diamonds, if you put them away just under normal market conditions, forget about inflation and all these sovereign debt situations and the debts in the U.S. and all that. Under normal market conditions, you buy a yellow flawless diamond and put it away for 10 years, and that $20,000 diamond will be close to a $100,000 diamond. You put the same $20,000 into a stock and wait 10 years, and the chances are is that you will not make any money on that stock investment, but your diamond will increase basically 500% from where you bought it. Now, how do you sell that? We sell our clients' diamonds for them. We own 8 Siegel Fine Auctions, the only real-time live auction site, and that's what we built it for, was for our clients to resell their diamonds. We will be having an auction in January. We will announce the exact date in the new year, but we have a spectacular auction coming up around the end of January, and everybody will be alerted to that as we have the actual date. So the yellow flawless diamonds, perfect for inflation, perfect for retirement, very conservative, never fall in price, and let's face it, with all the investments out there, you put your money in the bank today and you're going to make 2 or 3%. You put your money in the stock market, it's a gambling casino. You could either lose it, make a little, lose a bunch, who knows what it's going to do with all these derivative problems and the fiscal cliff coming up. The stock market is not a safe place to have your money. The other diamonds that you want to look at are Argyle pink diamonds. Argyle pink diamonds are starting to climb in price substantially, and soon they are going to be at a totally different price range than they have been in the last couple of years. These diamonds also go up by about 25% a year, but these have huge profit potential because the mine that produces these pink diamonds, the Argyle mine in Western Australia, has been in operation since 1985. It was the largest producing diamond mine in the world, producing about 30 million carats of diamonds a year, mostly low-grade white industrial diamonds that they use to cut other diamonds. But out of that 30 million carats comes about 200 carats of the most beautiful pink diamonds that you have ever seen. These are smaller diamonds. They're the most concentrated form of wealth in the world. And basically, in 2011, the largest diamond to come out of the mine, the Argyle mine, was just over 2 carats, and it sold for just over $2 million. This year, the largest diamond to come out of the Argyle mine was the Argyle Siren, and it was 1.32 carats, and that sold for $2 million. So if you can see what's happening as the mine is starting to come to a close, it's going to close down by 2018, which is only 5 years from now. The prices of these diamonds are climbing and climbing. The sizes are getting smaller and smaller. The prices are just going to be absolutely phenomenal. You could literally see a $50,000 pink diamond turned into a $500,000 return within the next 10 years or less. We're saying that the market is going to close. The Argyle mine will close in 2018, which is 5 years from now, and then give it 2 years for all these diamonds to run out. And we believe that a $30,000 diamond will be $300,000, and a $50,000 diamond will be $500,000, and a $100,000 diamond will be close to $1 million. So these are the diamonds that you want to put away. If you're looking to score big in the diamond market, market, those are the diamonds to own, because the Argyle pinks are next to impossible to get. We just invested a huge amount of money to buy Argyle pinks for our clients, and you'll see them all appear on our website going into the first part of the new year. So we have more Argyle pink diamonds than any other dealer in the world as we speak. If you go to rarecoloreddiamonds.com and go to the loose diamond section and look at our pink diamonds, you're going to see some of the most amazing videos of pink diamonds that you have ever seen. And these are the most concentrated form of wealth in the world. They have the greatest profit potential of almost any investment with absolutely no risk, because these diamonds never ever go down in value. Again, how often do you get to invest in a market where there will not be any more of these particular commodities, in this case pink diamonds, after 2013? It's a very rare opportunity. We saw the same situation happen with blue diamonds, and blue diamonds in 2005 were $200,000 a carat, and now a vivid blue diamond sold for $2 million a carat, went up 1,000% in the last 7 years, and we believe the same thing will happen with these unbelievable pink diamonds. You want to go to rarecoloreddiamonds.com, go to the loose diamond section, and look at our Argyle pinks, and you're going to see videos of the most beautiful pink diamonds that you could ever possibly imagine. These could make your retirement for you. If you're in your 30s, 40s, 50s, or 60s and have not put away enough money for retirement, or your RSPs are doing horrendous, which most of them are, you need to get into the diamond market. It doesn't matter what the name of the investment is. It's what gives you the biggest return with the least amount of risk. And I'm telling you that the pink diamond market and the yellow flawless market is on fire at this point, and it will be for the next 5 to 10 years. We anticipate our clients making fortunes in this market. The other market that I want to talk to you about is not a colored diamond, but it's a clear, colorless diamond. These are called D-flawless whites. If you notice, we are the only company that has them because they're nearly impossible to get. My partner, who is a fourth-generation miner and cutter, cuts 85% of the world's D-flawless whites and cuts 85% of the yellow flawless diamonds. That's why our clients in Canada end up with most of these diamonds. And we just put them away in our safety deposit boxes and just wait for the market to go up enough for us to sell them. And we own our own auction business to resell your diamonds. We're the only company that has that. However, these D-flawless whites are a phenomenon. They're perfect diamonds because ours are not only, D stands for the letter D, and that means a colorless diamond. After D comes the other colors in the alphabet, and as you get farther away from the D, it all of a sudden has more color to it, to where you get to the X, Y's, and Z's, and then you end up with yellow diamonds of a very, very, very light color. And then from there, yellow diamonds just take on a totally different realm. But all in all, these D-flawless whites, these round, brilliant D-flawless whites, are the only diamonds that the banks in Europe will actually allowed to be used in this fund that is just starting to trade in January. I met with them this week. We will be supplying them with their D-flawless white, so I know what the situation is there, and there's possibly another fund that's going to open up out of Hong Kong that is going to eat up the total supply, the total world supply of these D-flawless white diamonds. What I would like my clients and listeners to do, to invest in these diamonds prior to these funds buying out the entire supply of these diamonds over next year. There will not be any more of them because these funds are going to raise about $500 million, and there is not $500 million worth of these diamonds available. In fact, there's very, very few of them. So we do believe that these D-flawless whites are going to skyrocket in price, and we want to make certain that our clients own these diamonds prior to the funds buying out that market. The other thing about D-flawless whites, they're perfect diamonds in every way because the ones that we offer are called triple excellent. Means that they're excellent in cut, excellent in polish, excellent in symmetry, and that shows up right on the GIA report. If you're one of the fortunate few to own a D-flawless round brilliant white diamond, you've got a diamond that will make you a ton of money. And again, we are the only company that has these diamonds, and again, have just invested tremendously in them. One, to be able to supply this fund, and number two, and even more important, is to supply my clients, because there's nothing more important than my clients making money in this market. You know, we started this radio show almost 13 years ago when the price of gold was at $250, and it's hit $1,900. Most of my clients own physical gold. We started this show 13 13 years ago when silver was below $4 at $3.80. Most of my clients own physical silver, and silver has hit a high of $50. Talk about returns. We've seen massive returns on those recommendations. We started recommending oil 13 years ago when the price of oil was at $18, and we rode that market all the way up to $150, and we were the first company to recommend to our listeners to buy physical euros when they were at 87 cents, and they went all the way up to double that to 1.60, and again, our clients made fortunes in that market. Of all the markets that we've recommended over the last decade, we've done extremely well, but by far, the best returns are going to come from the diamond market. These Argyle pinks can return 1,000% over the next 7 years, and again, D-flawless whites can basically do the same thing. The other situation is that you should be aware of is that in 2008, when the stock market plummeted by 50%, it was these D-flawless whites, triple excellence, that went up 50%. So they're negative correlated to the stock market, meaning that when the stock market drops 50%, these diamonds went up 50%. If you had $1 million stock portfolio that dropped by $500,000, if you owned a 5-carat D-flawless triple excellent white, you would have made $500,000 on that diamond in 2008. That's how strong these markets are. So again, with the uncertainty in the world markets, we know that the U.S. is going to print another $1 trillion in 2013. We know that there's a sovereign debt situation in Europe that could wreak havoc on the financial markets, and several countries can go bankrupt. There's uncertainty with the fiscal cliff. There's uncertainty with derivatives out there that could wreak havoc again on our financial situations. We cannot put ourselves in this situation. We've worked so hard throughout our life to put away some money, and we know that when you put money away in your retirement account, you're not making any returns on it. So what is the point of putting your money in an RSP when you keep on losing your money there? All it does is defers your tax situation till you decide to sell it. And if you need to sell it early, you're going to pay a penalty and taxes on it anyways. So it's only a good situation if you can put your money to work for you in something that's going to give you a return. Just to put money into a retirement savings plan and have you lose money on it defeats the purpose of doing it. That's why we're saying that in combination with other investments, put a diamond away for your retirement. It will definitely do the job for you much better than stocks will, and on top of that, it has other massive benefits. It's portable, it's private, nobody knows that you own it, it could be sold in other currencies, it's real estate in your pocket. You could literally walk around with $1 million diamond in your pocket and nobody would even know it, but you can't walk around with $10,000 in your pocket, everybody would know it. So again, the diamond market is on fire. The reports that are coming out now are so bullish on diamonds, and this is the market that we've brought to our clients, mostly our Canadian listeners. We want you to get through these difficult times, and the best way to do that is through hard assets, owning physically your gold, your silver, your diamonds. I'll leave you with one other thing. I did a seminar recently in Denver for 100 of the wealthiest families there, and we did extremely well. It was actually shown all over the world. But the fact is that a lot of people around the world are interested in the hard asset market. So some of the attendees of my seminar in Denver visited me down here in Florida a couple weeks ago. They came down to look at some diamonds, but they also came down to go to a car auction. And there was a particular car auction that was going on at that point in West Palm Beach, Florida, and they had seen a car, a Camaro, that was going to sell for around $80,000. He came down here because that was his childhood car, and he wanted to relive his childhood memories and buy that Camaro for $80,000. First of all, back when he was a kid, a Camaro was $5,000 or $6,000. Now they're saying it's $80,000. By the way, it sold for $180,000. There was not one car that went up for auction that sold for the price that the experts said it would. And that's the same situation that's happening in diamonds. Randy's going to give you the diamond results that happened this week, and you're going to see the exact same thing. It's not that these experts at Christie's and Sotheby's don't know their business. It's the sign of the times. hard assets are going up in value and people want to own them, and they're bidding way more than what they're worth at auction. I've never been more excited about what's happening in the diamond market than I am right now. And again, go on our website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, and look at the loose diamond section. Look at our yellow flawless diamonds, our argyle pinks, and the most beautiful deep flawless whites that you've ever laid your eyes on.
Connect with Harold as well via phone, 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com. Harold was talking about the D-colored diamonds, flawless diamonds. And we should mention this story because this happened at Christie's magnificent jewel sale this week, December the 10th. Lawrence Graff, a billionaire, one of the top people in the diamond business, buys a 50-carat diamond for the third time he's owned this diamond. The top lot at Christie's sale was a 50.01-carat rectangular cut D-color, potentially flawless diamond. The item was purchased by Graff for $8.37 million, or $167,400 per carat. This is the third time he has purchased the diamond. The diamond was previously sold at Christie's, New York, to Graff in 2005 for $4.2. So he think about it there. That's a very nice appreciation. In 7 years since that purchase, the diamond has appreciated 99.3%. It is not known for how much Graff sold the diamond. This is the third time that I have owned this beautiful diamond, and I'm thrilled to have it, as I was the first time, said Graff. Diamonds of this exceptional caliber have a life and a legacy that carries beyond all of us. This is one of the finest D-colored diamonds in the world, and I'm delighted to have it back again. Also in that auction, Lot 318, an unmounted circular cut colored diamond, and this was a reddish-orange diamond. They called it a red, weighing 3.5 carats. The estimate on it, $700,000. It went for $2,98,500, so $2 million, over $2 million. Stunning, to say the least. Now, Lawrence Graff was not done there. There was another sale, and I spoke of it. It was Sotheby's sale, December the 5th. There was a 6.54-carat fancy intense pink diamond. It was sold for $8.6 million to Lawrence Graff. The estimate on it was $4 million. It went for $8.6. And Harold, he also picked up a 52.73-carat emerald-cut VS1 fancy vivid yellow diamond for $3.9 million. And this guy went on to obviously purchase the 50-carat D Flawless as well. Very, very exciting. In fact, I think the estimate, let me take a look. The estimate on the yellow was 3. It went for 3.8. But, Harold, we have about a minute left here. When you see somebody like Lawrence Graff, who's a billionaire in this diamond business, doubled his money there roughly in about, here we are, 7 years on that D Flawless, you know that this is a market to be in.
Oh, you bet. And Lawrence Graff, he's the stud of the business. Believe me, this guy has just made all his money in the diamond business. And, again, he's just the king of diamonds, in my opinion. So, again, it just reinforces what we've been saying all this time, and now it's really coming to the forefront. Look what's happening at the auctions. Look how much higher the diamonds are selling than what they're estimated to sell for. It's the same thing with cars, the same thing with art. It's the sign of the time. You've got to be in the hard asset market in order to get through these difficult times. They're safe. They never go down in value, not our diamonds. And again, we're the only company that can resell them for you. We own 8 Siegel Fine Auctions.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very, very profitable day.
The only company Harold recommends you use when it comes to investing in precious metals is Worldwide Precious Metals, a Canadian company out of Vancouver. They're the experts in this field. Give them a chance to earn your business. Connect with them at 1-866-623-2002. Their website is wwpmc.com, wwpmc.com. Harold's website for diamonds, rarecoloreddiamonds.com. The telephone number, 1-800-432-1022, 1-800-432-1022. His auction site will have an auction coming up in the new year. is hsfineauctions.com. Look around that website and get accustomed to what will be happening in January. And I highly recommend you get our newsletter from Worldwide or from Herald. For those that want to get it from Herald, please get the diamond section of our newsletter this week. The auction results and the story we have from the Wall Street Journal, A Diamond is Forever. And it just opens up your eyes to the potential of this market. But now is the time for hard assets. Speak with Worldwide, speak with Herald, and definitely invest today. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.